Hello and welcome to another update video about Bitcoin. We don't want to lose any time. We take a look at the microstructure. We take a look at if Bitcoin could still form another high in the current structure because the pullback has been quite deep overnight. Also, we want to take a look at what is actually coming up today because there's some financial data that's coming up. So maybe we take a look at that first and then we want to get into the chart very quickly. In terms of economic data, which could be a catalyst today, we've got PPI coming up today at 8:30 Eastern time. You can see it here. I've got the Forex Factory calendar open. You see here that this is something that could act as a catalyst. Also at 10 a.m. Eastern time, we've got the Federal Reserve Chair Jerome Powell speak again. Don't think there will be any new surprises coming out or anything, but still, all of this could shake up the market. I think we could have an exciting day ahead. And then tomorrow, and that might be even more relevant, we've got here, core CPI, month over month and year over year. They did exclude coffee from the CPI data. Ridiculous. Not because I like coffee, but it is, well, yeah, that because of that as well. But it's ridiculous because it's going up in prices and they just take out from the basket what they want to take out. It's ridiculous. But that is coming up tomorrow. So, brace yourselves for a potentially volatile couple of days. Let's get back to the Bitcoin chart, short term. A quick view at the bigger picture. That has, of course, not changed, but I need to repeat it. Not long, but just briefly for new viewers. We are still here in this correction. The main support area, it is between 61,761 and 50,700. And that's the main support area, which hasn't changed and which is quite reliable and which has been reliable for the last couple of months. So this is really, I think, what these are the key parameters. If you're interested in, like, let's say, layering in, adding positions, I mean, this is for me the most reliable support area that we currently have on the chart. Below 50,700, the overall assumption might change on the chart to something more bearish, at least short-term more bearish, which makes sense, but it would change the structure. That's the most important bit. At the moment, the structure isn't changing, and whatever is happening here in the short term, really just on the micro levels, I always say this is really just noise. It can be traded. It helps us understand what's going on. We can identify micro setups, but they are not as reliable as the larger degree. And in terms of the short term, the patterns are very, very fragile. The main benefit of tracking really the micro movements on the Elliott Wave structures, especially when we talk about corrections, is to understand what are the micro support and resistance areas, what are breakout points, what are invalidation points, and when do we see a first 5-wave move. Because, quick educational lesson, in Elliott Wave we're always looking for 5-wave patterns. Only the 5-wave patterns will guide us and will tell us when the trend is going into a certain direction. Whenever we have a 5-wave pattern that's clear, it can help us to identify a trade setup. It's not as easy as that. We also need to consider the bigger picture, the context, because the 5-wave rally could be part of a larger corrective wave. So it is quite complex. There is a lot to learn, but we try to make it as easy as possible for you. Here the idea is that in the white scenario, which is one of these scenarios, which is short-term bearish, but part of the overall bullish scenario, because it would end in the larger support box. In this scenario, we formed a W and X. That's a corrective structure. And the Y wave is unfolding now. It's a so-called WXY correction. We're now in the Y wave, which is an A, B, C structure. And in the C wave to the downside, we could get one more low, ideally into the region around 54K, maybe 55K. But this move would require a break above the upper micro support area, which is relevant for the yellow count. And because this scenario is tested first, it is the one I'm focusing on because it's being tested. The price is testing the support area. It's not necessarily more probable, on these smaller time frames. As I said, it is literally just noise. It's all about reward and risk and having some parameters, but it's impossible to give some probabilities on these micro time frames. Some people always ask for it. Impossible. It's literally on these smaller time frames. One moment it might look more like this the other moment, if a certain move occurs, because the markets are so dynamic, you have to assess the market in real time. And then it might look more like the other count. And therefore, I prefer to just give you the level that distinguishes the two. And as long as we're holding above the upper support area, we can go with the yellow count. At least we can give it a chance. We can give it the benefit of the doubt. But below the support area, below the line in the sand, if that support area breaks at 58,360, we're likely heading down in the white count. Now, in the yellow count, then we had a 5-wave move up, which we could call a wave 1. Again, that is this 5-wave move. Then a pullback into the support area on Friday, the 10th of May. We've seen a reaction. That was only corrective, as I've been saying yesterday and throughout the weekend. Only corrective movement we need for a first reliable assessment that we've really bottomed. We need a 5-wave move to the upside. At the moment, these rallies tend to fail after 3 waves. And I gave you in the last video yesterday just some levels to watch. And if broken, they would indicate that we are heading back into that support area. And that was 61,725. You see how relevant it is? The market tried to break it, still holding, but it looks as if it will give us a more convincing break. That already indicates that we at least might have seen a local top there, and that we're heading back into this support area, and that we will not be able to get one more high. Because it's come down so deep, and it's already broken it. Not a sustained break, which is why I leave that potential for one more high on the chart. But from a qualitative point of view, qualitative assessment, I can tell you it looks more as if the market failed to create a 5-wave pattern to the upside, which is quite weak, and that we're heading back into that support area down here. But it keeps the door open for one more high. It's just not very reliable. It doesn't matter as well, because this is not really a trade setup. It's more about, okay, do we get the 5 waves? If yes, then we get the next setup, because we can add the next key support area to the chart for a wave 2 pullback. At the moment, yeah, just wait and see. Just a corrective rally typically would indicate downside trend continuation in either the yellow C wave to the downside, okay, or in the white count. And then it matters really what the 58,360 level does. Are we holding it? At the moment, I would assume we're heading back at least into this support area. And then bear in mind, there is a catalyst coming out today a little later, and that could shake up the markets. So that's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.